So I don't forget.
It got noticeably quiet after you started recording.
Yeah,
I mean, we can talk about football on the recording.
no
I'm
more
fine.
chit chat, right?
It usually happens.
Make sure nobody else has emailed me really quick. I know I was getting a bunch of emails this morning asking for the link. So, okay, nope. All right, I have 11:30, and I want to welcome again Sandra Fowler. We were together a little less than a month ago, and I don't remember how many were on that Zoom live. It was 20 plus, I think, but since then, almost I think 60 people have watched it even
Oh,
after
wow.
so. And I tell every minister, and I would tell you all that are attending this seminar or watching it later, every minister should watch that, and really probably every financial secretary should watch that webinars in addition to this one. So that is available on our Mid-Texas YouTube page, which is also linked on our Mid-Texas website under resources, treasurer, and financial resources. And that is also where I will, once I can, I will download this webinar and place it out there on YouTube and linked on our webpage as well. So I would ask you, everybody, to keep themselves muted, please, unless you're called upon, or if you really need to voice a question at the end. You can use the chat feature to share questions. If I can help with those questions, I will, or I will kind of leave it to Sandra's discretion um, to kind of, sometimes the questions are asked, she's going to address, and, a couple of slides later and things like that. So we'll kind of leave it to Sandra, and then toward the end, if we have any time, we'll address anything that hasn't been addressed. So Sandra Fowler is an expert CPA and works for Sommerville Associates, who are wonderful. They know and work in this arena as kind of their main living, I think. And they are in Arlington, and I would just turn it over to Sandra. Thank you.
All right. Well, I'm glad y'all are here to join me today. Last time we talked about ministers' taxes. Today we're going to talk about year-end tasks for churches. So there is some payroll in here. I will tell you, payroll is my heart. I love payroll, and I think you either love payroll or you hate it. So one of the two, but that's what I really like to do. But there's some payroll in here, but there's some non-payroll in here as well. I did want to mention that there is a chat feature. I prefer to answer questions as I go about the topic I'm talking about on hand, especially in this session. This one is kind of like a whole bunch of different things thrown together. We're just going to mention multiple topics. So you really do move on from a topic to the next one. They're not always necessarily super connected. So it's much easier to answer questions as I go. So please feel free to use the chat to type any questions you have kind of as we go, and I'll try to catch those while we're talking about that topic and not come back and circle around. That can get a little confusing. So I have been at Sommerville Associates since 2002. I started part-time when I was getting my undergrad degree answering the phones. So I've been here a long time under Elaine and Frank, and just kind of grown up here. My whole professional career has been here. And I love helping churches. It's kind of an interesting balance to be able to feel like my ministry, which is also my job, is helping churches being able to get these things right. Because I really feel like if churches can get things right, then they can do what they're called to do. And that's often hard if you have you have a lot of good hearts who are volunteers, but they don't always necessarily have good expertise or good education to help them do the right thing for the church. So I really like being able to help churches kind of have some guidance and know what to do so that they can be doing the right things and keep in line with what the IRS requires of them and other governing bodies as we kind of move forward here. All right, so this session is about year-end tasks for churches. There are about 7 or 8 different things we're going to kind of hit on today. The last thing at the bottom is the OBBB Act, the One Big Beautiful Bill Act that was passed July 4th. I think he signed it on July 4th. So we're going to talk a little bit at the very end about how that affects some of this other stuff we're talking about throughout the rest of the presentation because changes are coming, at least some, that will affect us kind of as we go forward. All right, so we're going to talk about policies, we're going to talk about contribution receipts, budgets, worker classifications, 1099s, W-2s, all those fun things we get to do in the next, let's say 2.5 months, because some of this happens in January, not all before 12/31, before the clock strikes at the end of the year. So just some things you need to kind of be thinking about and get done as we get ready for the new year, as we're kind of coming into that. All right, so the first thing I want to talk about is reviewing and updating your policies. So back in 2007, I believe, the IRS redid the Form 990. Now that doesn't affect you because churches don't have to file that form. But when they did that, that form went from being like just numbers to being numbers plus a lot of disclosures. And that form is the form that nonprofits who are not churches file with the IRS. So basically, it's a big disclosure form that says all the things that that nonprofit is doing. So in that, the IRS basically started saying that, okay, if your organization has good policies, that means that you are governed well. Well, we all know that's not necessarily true, but it's definitely the stance the IRS takes. So to that end, there are certain policies that you need to have so that you will be able to govern your church correctly. Now, some of these are required by law for all organizations, all corporations, and those would be the document retention and destruction policy and the whistleblower policy are both required by law for all organizations. So at the end of the year, it's time to look at what policies you have and kind of go through them and see, number one, do you have them? Number two, are you actually doing what the policy says? So a policy is only as good as if you're actually following it, right? Rules are great, but if no one's actually doing what the policies say, that doesn't help you. So a conflict of interest policy, I'm sure you've heard about it. A lot of times people are setting those up when your organization is initially set up. It's kind of a part of your bylaws oftentimes. But that policy basically says what happens if the decision makers have a conflict of interest. So if there's a person, an individual that could benefit from some transaction, how do you deal with that? So you need to have that policy. You also need to have a document retention and destruction policy. This one and the whistleblower policy both came about kind of after Enron and Arthur Anderson, and that big thing happened in the early 2000s. So basically, if you have a policy that says when you are going to destroy documents, and you follow that policy, then if somebody comes back and you're shredding documents, which is what happened in these situations, the IRS came in or the SEC came in and they were shredding documents and it looked quite slightly suspicious. So these policies help you know when to get rid of things so that when you are getting rid of things and following your policy, it kind of covers you and it doesn't look like you're trying to hide stuff if something were to come up. Whistleblower policy is kind of right in the same thing. If somebody sees something that is going on that they know shouldn't be going on or they suspect shouldn't be going on, this policy tells them who they can talk to, who they basically can disclose what's going on to without getting in trouble. So the IRS requires the document retention and destruction policy and the whistleblower policy. These other policies on the other side that are more for best practices, these are things that just help you manage what you're doing with your organization. So your gift acceptance policy is a policy that helps your person who receives non-cash contributions to know what to do with them and what types of gifts to accept or not accept. You know, there is such a thing as a bad gift. It's not always good when people are trying to get rid of things and they're like, hey, that church can use this. Well, do you really want a burial plot 4 states away? Probably not. It probably will cost you more to maintain it than the actual good that it's doing. So this policy actually helps you and your person who's receiving those non-cash gifts be able to say no nicely. There are certain things that will help us, and we're very grateful for it when people want to give us something that will help us. But like I said, sometimes those gifts are not always helpful, even if the intent was to be helpful. Credit card policy. This helps you as your workers know what should happen if they have access to a church credit card. When they need to return in receipts, if there's a checkout process and a check-in process for their credit cards, how to document expenses that are made on that credit card. And also, usually most of these policies, whoever would receive the credit card would be signing that policy saying they received that. So if they know, okay, if I don't turn in receipts for charges that I make on the church credit card, that is considered compensation to me. It gets added to my W-2. So that's kind of what's in that policy. Benevolence policies helps your people determine how to give out benevolence. That seems kind of weird, but within that policy, it includes like, how do we prove that someone actually has a need? Benevolence is not meant to be just free for all money. Like, we need to be able to document that we're actually helping somebody with this money. It's not just free cash. It's a policy that tells them what type of documentation we need to document that there is a need. It also talks about who makes the determination as to who gets those funds. You have to be very careful within these benevolence policies that they're followed consistently, because what we don't want happening is we don't want the benevolence to really just be the way that the pastor funds his family or something like that, which would be strewn, obviously not as a good thing for the organization. So if the policies are in place and they're followed consistently, they definitely help you. A facilities use policy, this talks about when you want to rent your facility. I will caution you, if you're renting your facility to an outside party, you need to at least consider the potential of that being unrelated business income. And that's all I'm going to say, because that thought could be an entire speech on its own. So just realize, if you're renting your facilities to somebody who's not the church, then you could potentially have other income there. Accountable reimbursement plan. This tells us what people need to provide in order to be reimbursed. So like I said, having the policies is step one. Making sure you're following the policies is step two, and you need to review your policies, because if you're not following the policies, maybe the policies are outdated and they need to be updated to be exactly what you're actually doing and something that's more user-friendly for your organization. All right, so reviewing policies. That's number one. Number two, charitable contribution receipts. How many of y'all love charitable contribution receipts? Yeah, I don't really love them either. Oh, well, I mean, I guess that means you're getting contributions, right? That's a good thing. So at the end of the year, as things come to an end, one of the things what we have to deal with is getting these contribution receipts given out to our donors. All the information you could ever want to know about charitable contribution receipts is in publication 1771, IRS publication. That's on their website. It tells you everything you could ever know. It's very, very detailed. So if you have a question, go there. But in general, a charitable contribution receipt is required for every donor who gives a single contribution of $250 or more. That's not cumulative, that's a single contribution. So if at one time they gave you $250 during the year, they're required to have that receipt. As is a little bit different from most things we handle, there's a little weird cutoff rules that we're allowed to use for charitable contributions. So those are considered to be received the date they are delivered. So the postmark date. So at the end of the year, you don't really get to just cut it off as to what you physically have in hand. You need to see when things were physically mailed. Not the check date, but if they mailed you a check, contributions are considered received as of the postmark date on that envelope. The same thing in your online systems. When did they physically give it? It doesn't matter when it was deposited in your bank. There's a little bit of a delay there between when it comes in through the electronic system and it makes it to your bank. But when you figure out when they actually gave the contribution, and that helps us know what year to put these in. A little fun fact, I know that a lot of times people will go around talking about how you have to get these receipts given. The IRS actually puts the responsibility of a contribution receipt on the donor and not on the organization. So basically what the IRS says is that the donor has to have the receipt to take the deduction. It doesn't say that the nonprofit has to give the receipt, which is a little interesting, kind of a different caveat. Now, granted, you want your donors to be happy. You want to give your donors the receipts timely, but there's not really a deadline there. I say that because in January, when I'm busy doing W-2s and 1099s for 50 trillion people, we have some organizations that we do their contribution receipts. And because there isn't really a deadline for contribution receipts, that gets to be the last thing on the list. There's not a penalty anywhere. And like I said, we try to get those done as soon as we can. But if you're prioritizing things and you're a little overwhelmed, you can push the contribution receipts back a little. Now, I'll also tell you that a lot of people do contribution receipts for everybody, regardless of that $250 limit. And that is totally fine. There's nothing wrong with that. But they have to have it if they gave a single contribution of $250 or more. So what does a qualifying receipt have to have on it? So it has to have the name of the organization. It needs to say the date that the receipt was provided, the amount of cash that they provided, and that IRS lovely little sentence we probably could like quote, we probably hear all the time: no goods or services are provided in exchange for this charitable contribution except for intangible religious benefit. Those have to be on the charitable contribution receipt. The main thing the IRS says, if your donor was ever audited, when the IRS sees the receipt, it needs to look like something that's official. I know that sounds kind of silly, but it doesn't need to look like just a simple printout. Someone could have typed up and printed out. So it needs to look authentic. Sometimes that also means people would prefer that somebody sign at the bottom of the receipt, like a board member, head of a committee, sign that it was official. The receipt itself needs to be dated. If for some reason you had to send out a second set of receipts because there was a set that was incorrect, then you would want to make sure those were dated so the most current receipt is the one that was used. Okay, so let's talk a little bit about weird contributions. So weird as in not just a normal, they put their check in the offering plate every Sunday contribution. There's some requirements for those receipts that are a little bit different that I just want to mention so you're aware of them. If somebody gives you something that is non-cash, which we kind of talked about that gift acceptance policy earlier, the church needs to acknowledge that they received the thing, whatever it was, and provide the no goods or services statement, assuming they didn't get anything in exchange for that. But they do not provide a value of what they received on that contribution receipt. I know that seems a little confusing because often for our books, for our accounting, we have a value and we record it as such in our accounting system. But the receipt itself should not have a value. It is up to the donor to determine that value. The donor and their CPA can determine what the value of that non-cash thing was. Like I said, you often have a value, you just don't usually put it on the receipt. You can't put it on the receipt because that increases your liability. Now you're the expert who said it was worth $50 or whatever, and you don't really want to do that. Quid pro quo contributions. So if somebody gives something, quid pro quo means this for that. So if somebody gives something and they get something in exchange, if they give a contribution of $75 or more and they receive something back, so a portion of that is not deductible to them, the IRS requires that you issue a receipt. It doesn't matter if it doesn't meet the $250 threshold, you have to issue the receipt. And the receipt will provide to them the amount of how much the contribution was and the value of what they got in exchange. So usually you see this for like if there's a banquet where we charged a fee for them to come to the banquet and charge them $100. Well, the meal only cost $25. So then the receipt would say, thank you for buying a ticket for $100. The value of what you received was $25. And so that receipt itself, there's a calculation that can be done to determine how much is deducted. Because they can't deduct the value of what they paid for the meal, like the value of the meal, right? That's not really a contribution. It's like going to the restaurant down the street, paying $25 for a meal. So you have to issue these contributions receipts for these quid pro quo contributions. There's actually a penalty associated with it if you do not issue these quid pro quo contributions. Whereas for normal contributions, the onus is basically on the donor to have a contribution receipt. In this situation, if you do not issue the quid pro quo contribution receipt, you could be penalized for that. Okay, donation of cars. If somebody donates a car to you, there's a 1098-C form that has to be completed. It has to be completed within 30 days of receipt. So what happens is if somebody were to donate a car to the church, you would complete this 1098-C, give a copy to your donor, but then they don't get filed with the IRS until the end of January, February with the other 1099s. So it's a little bit of a weird thing there. But those receipts, that is required if you were to receive the donation of a car. If you sell the car and make money on it, there's actually a way you have to amend that 1098-C to provide information. So there's a lot of kind of specifics there. Just know that if you get a car contributed to you, that you need to think through that and realize, hey, there's a different receipting requirement with a car valued at more than $500 to your organization. All right, budgets. Does anybody love budgets? Just wondering. I mean, like, I don't mind them. It's definitely funner to do budgets when there's money to afford everything that you want, right? It's a little bit harder when money's a little bit tight. And that's kind of where we're at. In my experience, since COVID, contributions have just been down. Life's just a little bit different than it used to be. But it is important at the end of the year, as we're coming to the end, that you review your budgets. So there's kind of three pieces of that. One is looking back. So are you going to meet the 2025 budget? Do you know? Have you even looked at your numbers to know if you're going to meet the 2025 budget? Do you need to push year-end giving? Do you need to do something now so that there's enough money to cover those expenses for the year? Secondly, you need to look forward. Provide a budget for 2026. Remember to take anything that's unusual out of that. There's an unusual expense and you had to do a huge renovation or a huge repair for something, had to get a new roof, whatever. Make sure you take that out of your numbers when you're comparing them to try to get a 2026 budget. And then if you do it early enough, like right now, you may need to revisit again, depending on what happens in the next month before year ends. If something changed in your area that would potentially change your contributions in the future, you need to know that for your budget because you can't really budget or plan your expenses if your income is kind of arbitrary. We want it to be as good as it can. This is still a budget, so it's not actual. It doesn't need to change with every 25 cents you move somewhere. But just get a feel for whether you can afford what you're trying to do, or if you need to cut that back on programs, or if there's extra funds to do more outreach or something like that. Also, you need to have a plan. If there's not enough funds, if budgets are not met, where are you cutting? Where are you cutting? I know nobody likes to think about that. However, you don't want to be continually going in debt in order to fund your programs. You just have to figure out how to be creative. And with that creative, usually when money's short and people are trying to make their budget, some people are super creative and coming up with creative ways to make money. And that's not a bad thing. I'm not a super creative person. I'm an accountant. But oftentimes those creative people don't understand the tax implications of creative ways of getting money. So when somebody comes up with some great creative way to make more funds to help you for the future, make sure you consider unrelated business income in relation to that. You can't just go do whatever you want and make money whenever you want, as long as you're using it for church purposes. The IRS very clearly tells us that they don't really want, and this is kind of, I guess, their motivation. They don't want a nonprofit organization who's not paying income tax to be competing with the for-profit organization. That's kind of the gist of this unrelated business income thing. So if you're doing something that's not related to your exempt purpose, then potentially there's tax. Now, I will tell you, having unrelated business income is not the end of the world. It's not. There are several organizations that we work with who have unrelated business income tax. They have to file a 990T. That's okay. They know there's tax. They just plan that into their budgeting for that. But you do need to be aware that that should not be the primary thing you're doing, or even close. Like a small piece, okay, but realize there could be tax implications when people get creative ways to make money. Because you can't just do whatever you want. You're a nonprofit. There are very kind of specific rules to what a church can and can't do before there is potentially a tax consequence. All right, reviewing worker classification. I feel like this is a hot topic a lot. I feel like I see it a lot. I feel like I hear it a lot. I feel like I get these questions a lot. So we're going to talk a little bit about worker classification here. There's kind of two different things I want to talk about as it relates to that. The first is contractors versus employees. Okay, so we need to be able to understand who's a contractor, who's an employee, because it affects a lot of things. It affects how we report our income to them. It affects tax withholding. It affects lots of things. But once we get past that classification, the other thing that we need to think about, which maybe is not addressed or talked about as much, is are our employees exempt or non-exempt employees? And we're going to kind of look at both of those. Okay, contractors versus employees. So as I mentioned, your worker classification determines, does tax need to be withheld or not? Okay, so we're talking about Social Security, Medicare tax, we're talking about federal tax, and it determines how we report their income to them. Are they going to get a 1099 at the end of the year? Are they going to get a W-2? The last thing it determines, which I'm seeing this a lot more, honestly, is their participation in benefits. Oftentimes when people are determining if a worker is a contractor or an employee, the first thing they think about is, well, it's just easy, just make them a contractor. I'm just going to issue them a check. It's not a big deal. And then we'll just give them a 1099 if they meet that. The other thing we see a lot of times is like, I know they're never going to get to the $600, so it really doesn't matter. I'll just give them a 1099 because in this grand scheme of things, that is a little bit easier. You don't have to go through HR. You don't have to go through all those forms they have to fill out. And I understand that. However, the IRS is really, really cracking down on this more and more. So when the IRS determines if someone is a contractor or employee, they are not looking at what is convenient to the employer. That's not what they're looking at. They're trying to figure out who controls these workers. So you have to understand that in addition to the tax piece, which yes, that's definitely what they want. The IRS wants more taxes to be withheld, right? Obviously, that's their income maker, right? But there's also a potential liability piece we need to think about here when we're figuring out how we're classifying these workers. Okay, so the IRS provides us 3 different categories of control we need to consider. This is all in IRS Tax Topic 762. It's on their website. You can look. There's a lot of information there, much more detail than I'm going to go into today. But we need to figure out who's controlling these workers. Who has the behavior control? Who's controlling how they're doing it? Now, I understand in the ministry, especially with ministers, not necessarily non-minister employees, the ministers have a lot of behavioral control. Like, oh yes, I need you to preach within like, okay, what the Bible says, but like, I'm not picking your sermon topic, right? Not most of the time. But when and how is the work performed? I mean, this is a little bit of a huge example that no one would ever try this, I don't think. Your pastor's not gonna just like pick a different time to randomly preach to whoever, right? Like your main person, they're gonna be an employee, like here's the schedule, here's where they preach. But maybe people who we would otherwise consider volunteers, but now we're deciding to pay them, maybe they have a little more control. So we just need to realize who's controlling the work that's being done. And is the work that's being done a huge part of what the organization does? I didn't list out all this stuff. Like I said, there's tons of stuff on the IRS website. But the function that is being performed by these workers, if that is a primary piece of your nonprofit mission, that goes against you when you're determining if this is a contractor or an employee. Like you wouldn't contract out, I don't know. You wouldn't contract out the pastor. I mean, most of the time a pastor's at one place all the time, every Sunday. You have control of him. Like he's your employee, he's what you do. But if this job is not integral to your mission, then I could see you trying to think it was a contractor. Anyways, behavioral control. There's also financial control that needs to be considered. Who has the financial risk? Who's going to lose money? Well, if they're an employee, which is what most of the time. Here's my gut. When people go to look at this as a contractor or an employee, most of the time it's because they already know they're an employee and they're trying to make them not an employee. And maybe that's not true, but because, like I said, making them an employee is a little more work. HR, we got to get the forms, we got to do the whole thing. So most of the time we're trying to make them a contractor when we really know they probably should be an employee. But who has the financial risk? So an employee, like someone who works at Chick-fil-A, pick something random, does not have financial risk, and does the Chick-fil-A make money, right? If the company doesn't make money, the owner, manager may not make money, but that little minimum wage, I don't know, $15 an hour, whatever they're paying them, is not going to like lose money. They're going to be paid for their wages. That's what we're talking here about, financial control. So let's think about from the other side. So like a landscaper who does this for multiple people, who owns all their own equipment, probably a contractor, okay? So we just need to think through this. Is it a contractor? Is it an employee? And the last thing to consider is the relationship of the parties. I think we put a whole lot of emphasis on the relationship of the parties and not nearly as much as on who's controlling. It's like, oh, they're just going to watch the kids that one time during that one event. It'll be good. You got to figure out who's in control. And I will tell you, one of the main places we see where people are misclassified is either the child care workers or the worship team members. Partially because worship team members, they think they're in control. I mean, I don't know. Those musicians, they're kind of creative. I say that as I play piano at my church, so that's kind of funny. But those worship team members, really, we have some court cases that tell us that in like the old, think like jazz clubs, you have these people coming into this like restaurant and they're musicians, right? They're playing while you're there and you're eating or at the bar, whatever. What the IRS ended up saying is either they're all employees or the leader is an employee and the members are employees of the leader. So think about that. Either your worship team members and the musicians are all employees, or he's got to start paying all those people underneath him. That's his responsibility. So to that end, most of the time, the people who we see misclassified are these worship team musicians and the child care workers. And I will jump a little bit on my soapbox about these child care workers. We need to be really, really careful saying that we're letting people watch our children and we have no control of them. So if we make them a contractor, now we're saying we have no control of them. So when something happens or someone accuses somebody of something, even if nothing happened, now we're saying we had no control of them. Now, what does our insurance company say to try to help us with the lawsuit, right? We're like, oh, well, we didn't really, they were contractors. Yeah, not really a good place to be in. You should be background checking your childcare workers, et cetera, et cetera, et cetera. It's happening more and more, unfortunately. Either people are doing things they shouldn't be doing, or just the accusation. Like, it's just a big area you really have to think through before you try to make all your childcare workers be contractors. So if you determine that you have misclassified workers, so you've gone through these tests and you figured out, you know, they probably should have been employees, but I've been calling them contractors. As the accountant that I am, who wants it all to be perfect and wonderful and fix things as soon as I realize they're wrong, there is a voluntary reclassification settlement program that the IRS is allowing for people to reclassify their workers from contractor to employee. And it's a great program, but it takes some time. So to that end, if you realize somebody has been misclassified, don't just change them over and fix them. I know, I understand that's really hard to keep paying them wrong. I get that. But if you go through this program, what happens is the IRS will let you pay a very small portion of the tax you would pay in relation to going back 3 years and grossing up their payments and all the Social Security tax and all that. I think it's like 10% of the tax. It's a really, really small amount if you go through this program. So basically you self-confess that you did it wrong. You tell the IRS, here's my group of workers that I filed wrong and they really should be employees. To qualify, you have to have been reporting their income correctly. So if they qualify for a 1099, you had to have been giving them a 1099 for 3 years. And then once you get this agreement, it's kind of a back and forth, and there's like a agreement that says, as of this day, we're going to change them. You pay your fee, and then the IRS cannot go back and audit those groups of workers. So it's a really sweet deal. Like I said, you have to file it 120 days in advance of the change. So you have to, for 120 more days, continue to pay them wrong. And I understand that's wrong and it bothers me. But in order to get into this certification, don't just fix it. That's what I'm saying. Don't just fix it. Go through this program, fess up to the IRS, pay your smaller amount of taxes, and then the IRS can't go back and audit it. And you will get them fixed eventually. You just have to be a little patient to make that process happen. So it's a pretty sweet deal. We've done these for several of our clients. So if you determine someone has been misclassified, I would highly recommend going through this program to fix it. It's way cheaper for you. And there's the assurance that the IRS won't come and audit, which to me is almost more valuable than the decrease in tax for that little piece. All right. So that was contractors versus employees. Now let's talk a second for exempt versus non-exempt employees. What I see a lot of times is people want to say that salaried means exempt, and that's just not true. It's not true. The Department of Labor is who governs this exempt versus non-exempt status. And they, just like the IRS, have tons and tons of details on their website that you can find and go look up. But saying that you're going to pay someone $300 a month does not by default mean they are now exempt from minimum wage and overtime rules. Okay, I will tell you that what helps a lot of the church is that there is a ministerial exception, which gets these minister employees out of this discussion at all. So, whereas for tax purposes, an employee has to have 2 qualifications to be treated as a minister. They have to be licensed, ordained, commissioned, and be doing minister duties, which we talked about in the other session. For this purpose, they only have to be doing minister duties. So there's not a license requirement here. And that's really good for us whenever we're hiring these. The most common place I see it is like the youth intern. who is doing minister stuff, right? But usually they're working on their ordination or working on that process, whatever that looks like. So as long as they're doing minister stuff, they can get this ministerial exception, which means you do not have to worry about overtime for them. You do not have to worry about calculating how many hours they're working. You don't have to make sure you're paying a minimum wage. Probably not good for the worker because they're probably working a lot of hours to plan and do all this stuff. Hopefully you're paying them well for what they're doing. But you don't have to track hours for this purpose, okay? So that takes all those minister people who are doing minister things but maybe not exempt or maybe not ordained, and the ones that are ordained out of this discussion totally, okay? So now we're just left with the employees who are workers for us but not ministerial. Now we have to figure, are they exempt or non-exempt for this purpose? So there's some very specific rules that you have to follow in order to be an exempt employee. The first one, right off the bat, is that their weekly salary has to be at least $684 a week. At least. If they don't make $684 a week, it does not matter what they do at your job or at your church, they are not exempt workers. Except for the ministerial exception. Like I said, we already threw those people out. Okay. So then after we determine they make enough money, now there's 3 more categories. They have to fit into one of these 3 categories in order to be exempt from minimum wage and overtime. The first is the executive worker. This is someone whose primary duties are management, and they have to manage at least 2 full-time employees. So if you don't have people under you, you can't be an executive exempt. The second is an administrator. So the administrative exemption is more of an office manager and not just an assistant, because they have to be able to exercise discretion. So if your pastor's secretary is always asking the pastor for his opinion on everything and he's the one making the final call, they don't fit in this category. They have to be able to exercise discretion and judgment. So have to be able to sign agreements. I mean, think through this. This is like a high-level administrative person, not just, the youth pastor's assistant or whatever. But they could potentially be exempt. The third category here is a professional exemption. And this is somebody whose primary duties are work that require higher education or a higher license. This is where CPAs fall in. Okay, so think of someone who went and got a master's degree in something that they're doing for their job or who got a certification. They can qualify here as a professional exempt. So if they met the $684 a week compensation limit, and they can fit in one of these 3 categories, now they're exempt. But if they don't, you need to be tracking hours for your employees to make sure they're not working over 40 hours a week. You need to make sure that they're being paid at least minimum wage, which has not changed in many, many, many moons federally. So it's not actually that much. Most people make more than minimum wage. My children, I have a couple who are just out of high school and 3 who are just out of high school-ish, they make like $14, $17 an hour, which is almost double minimum wage. So people making minimum wage just doesn't happen that much. And they have no additional training or skill or licensing or anything. So minimum wage doesn't happen that often. But if you're just paying somebody $100 a month to do something and they're not ministerial, you need to be paying attention to how many hours they're working, because you may owe them more money because they're not making at least minimum wage if they're depending on the number of hours they're working.
Sandra,
you need to have them tracking hours.
Sandra, real quick, I thought a couple of years ago that that minimum went up. Did that get rolled back? I can't.
Yep.
Okay.
It got rolled back. There was discussion up and down as to whether the Department of Labor had authority to do that. And there's this whole, but yes, back to 684. There was
Okay,
a
good.
huge
Thank you.
discussion in the middle. But yes, it rolled back to 684, which is the 2020 rate. Is that right? Yeah, the 2020 rate. So yes, that did. Make sure you're writing your job descriptions well. That's my ending point on review workers classification. Your job description should include whether this job is a ministerial or a non-ministerial position. And the job description itself should include whether this is an exempt or a non-exempt position. If you have that in the job description before you hire somebody, then that takes care of this from the beginning. You're not having to think about it every time. It's a little bit more difficult when you're shifting responsibilities around between jobs. It gets a little muddy, but make sure your job descriptions are written well, and that will help you kind of in this process. All right, so we've made it through all the non-payroll stuff, although this is a little bit payroll-y. Now we're going to step into the payroll stuff for year end. How many of y'all love W-2s and 1099s? I actually really do. January is like my Super Bowl. Like I thrive. I thrive, okay? And I know it just makes me really weird and kind of nerdy, but I get it. So preparing and filing your 1099s. This slide used to just say file your 1099s, and I changed it because what I've learned in my experience is that the 1099s are only as good as the information that you put into your system. So there's a very easy way in QuickBooks, and that's one of the softwares we use the most often, to say file a 1099s and it prints them all out. But I will tell you, those forms are only as good as the information you've entered into that system. If you do not have complete information for your vendors, those 1099s are no good. To that end, before we start doing 1099s or W-2s for any of our employers or any of our clients, we make sure all the transactions are in our accounting software. So we want bank accounts to be reconciled and all that, because if your accounting system is not complete information, your 1099 is based on not complete information and potentially could be incorrect. So we make sure all that happens. Now, I will tell you, we don't care as much if the credit card transactions are entered. Usually that bank or that statement cutoff is mid-month anyways, which kind of messes around with us. And that's because credit card transactions don't get put on 1099. But I'll talk about that in a second. But your bank accounts need to be reconciled and transactions entered as much as you can before you start filing those 1099s, because you want good information. If you have bad information, you just end up having to amend a bunch of stuff, and that's not super fun. So in addition to that, your accounting being complete, are your 1099 vendor files complete? You know, it depends who does your accounting, but oftentimes, sometimes, I shouldn't say often, sometimes when we're adding a vendor into QuickBooks or whatever accounting software, we just add it to move on so we can write the check. We don't necessarily make sure we have the legal name, their EIN, social security number, EIN number, the address is complete, is it marked as a 1099 vendor? That should all be a part of your process on the front end when you're creating the checks for the employees, or a year later, you're having to go find information, and that is absolutely no fun. So you need to make sure those are complete information. I will tell you that kind of recently, many systems have switched to these being provided electronically to the recipients. And to that end, you also need an email address in your vendor system because those go electronically through an email address. So you need to make sure your vendor information is complete. I will tell you, if you have a legal name in there and there's a social security number attached to a name that is not a person's name, the system won't go through, does not compute. Okay, so you need to have social security numbers for names like Sandra Fowler, and you have EINs for like company names. Now, oftentimes you'll see the name they gave you is really a DBA, at which point in your system it should say Sandra Fowler, DBA, whatever my random business would be. I don't even know. So then that matches, because if you're, like I said, if you have a social security number, but the name of the company is like a name, like, you know, Green Tree Landscaping or whatever, it doesn't compute. You're going to have issues with your 1099s. So make sure your vendor files are complete. Also, you need to make sure your 1099 accounts are correctly mapped in your software. So this gets a little sticky when you have expense accounts that have both goods and services in it, because the only thing we're putting on these 1099 NECs is services. So if we paid somebody an amount and it included a reimbursement for some other expense, or we bought goods for them and there was services attached to it, both of those numbers by default will go to that 1099 if they're in the same account. So we need to be careful that we split this so that the 1099 NEC is only showing services if we have that split. If we don't have that split, then all of it can go on their 1099. But if we have the split between like labor and goods, we need to split that, and it probably should be in separate expense accounts so we can be mapped correctly for the 1099s. The other thing we need to think about is fixed asset accounts. So sometimes if you're doing a construction project, you will have tons and tons of vendor payments in these fixed asset accounts. That's fine, but depending on your software, it may only pull 1099 numbers from an expense account. So you got to think through that a little bit and make sure you're not missing anybody who's in this fixed asset account, just because we didn't really think through that totally. So like I said, your 1099s are only as good as the information that you put in the system. So you need to make sure that you're giving it good information, so that the 1099 can be correct, as far as it depends on you, and not just hitting the button. when 1/1 comes without complete information. All right, so filing the Form 1099s. As of 2024, if you file more than 10 forms, W-2s and 1099s combined, you're required to e-file said forms. I think that's great. I'm usually a late observer, late on the new things, but I actually really like this. The IRS does still accept handwritten 1099s. I don't think that's going to happen very long. But the systems are really great. The IRS has a system online that you can data entry, or it even lets you import it. The information in there to file the 1099s. The other benefit, in my opinion, of filing these electronically is if you use a system other than the IRS system, which there's tons of them online. The one we usually use is tax1099.com. It also will provide those to your people electronically. Like, I remember the days when we were like printing all the copies and stuffing all the envelopes, and that was such a nightmare. I did still really kind of like it, but we had this one client which I usually got out of stuffing envelopes. I mean, I'm managing it, right? I shouldn't be stuffing envelopes. But we had this one client who had like 250 1099s, and we get them all stuffed, and it's all wonderful, and we go to count them. There's 249. So then we have to figure out who we're missing. Okay, all that goes away with the e-filing if someone else is filing, right? So there's definitely a benefit to that. And honestly, I'm not having to buy forms. Like, every year I used to have to estimate how many forms I needed for my clients in order to print everything. And it's a shot in the dark. Let's hope they didn't have a whole bunch, because I can kind of go from last year, but we would get surprised from time to time. I had made a run to Office Depot on January 28th to get more forms. So that is actually really kind of nice for this all to be done electronically. And you don't have to worry about it getting lost in the mail. I mean, COVID made that very, very evident that forms in the mail are not a super secure option. Things got lost and stuck and in big trucks for years, seemed like years, months, just getting it to the IRS. So I can prove it went to the IRS with an e-file, with like a confirmation number, and know that it went there, which I really like. So like I said, 10 forms total. That includes your W-2s and 1099s. That's your limit before you have to e-file. So this is the second year we're on that. Third year, I think, because I think it was the 23 forms we'd filed in 24, but I could be wrong. Could be a year off there. But they all have to be e-filed now, basically, is what they're saying. Also, you need to realize that your 1099s are being reported on cash basis. So it's not about what we billed all these people, it's about what they actually received. Just like the 1040, our tax return is based on cash basis. So it's the same kind of thing. So you have to think through that a little bit and not just pull. If you pull a report, make sure you pull it in cash basis to get your numbers correct, to go on that form correctly. Also, 1099s do not include amounts paid by credit card, which is why I said earlier I don't really care what's on your credit card, or similar payments. For example, if you pay via PayPal or Stripe or Venmo, those amounts don't go on your 1099s. So the reason for that is because those processing systems have to give 1099Ks to people who receive funds. Now, the limit is really high, so there's a big gap. I think it's a $20,000 limit on the 1099K before they have to give you one. But think, if your landscaper receives all their money through PayPal, I would guess they probably made more than $20,000 in the year doing landscaping. I don't know. It depends how big their business is. But they'll be getting that from the 1099K from the processor. So it's trying to stop people from reporting the same income on two forms.
That's interesting though, because so
It is
if they're under
interesting.
the limit, they don't pay tax on that.
Oh, well, they should, because they should report it even if they don't get a 1099. But that's a
Right.
whole other discussion also. It's not only
Interesting.
taxable when it's on a 1099, it's taxable before that.
Yeah. Okay.
You earned it. But yes,
So a debit card would be considered cash, is that correct?
it depends. Is it a Visa debit card or a
Yes.
MasterCard debit
Yes.
card?
Yes,
Then it's not considered cash.
but it's issued by the bank, and so we pay our landscaper that way. It's direct
Yeah,
payment.
but if it has a MasterCard or the
Yeah.
Visa symbol on it, then it
Yes.
does not get put on 1099.
Okay.
The one exception is Zelle, and Zelle has worked really hard to make sure to be the exception, which is silly. But they say that they're a facilitator and not a processor. So it doesn't go through the credit card and the fee happen. Usually the fee is your big trigger that this is really shouldn't be on the 1099. The issue is we don't usually pay the fees. The other side pays the fees, so we may not know if there were fees there or not. But, and honestly, if you don't know, it's more conservative to report it on the 1099 than to leave it off. But just be aware that part of the reason why our 1099s sometimes take us a bit is because we're digging through and figuring out how these people are being paid and not just hitting a button when the year has ended and it's time. All right. All right, here's some of the thresholds as of now, and I'll edit that at the end in the One Big Beautiful Act information. But for this year, for the 2025 forms that we're about to file, the limits for 1099 NEC, which used to be on the 1099 miscellaneous, this is where most, in my experience, most of your 1099s are this NEC, this non-employee contractor compensation, non-employee compensation, yeah. The limit is $600 or more during the year. It's issued to everyone except for corporations, basically. Individuals, partnerships, and LLCs. I will tell you, if you've ever looked at a W-9, there's a box where they mark LLC, and then there's a subsequent box, which often gets not marked, that says taxed as a corporation or taxed as a partnership. And oftentimes they don't know, and they don't mark that box. So if they're taxed as a partnership, then they get a 1099 as well. If they're taxed as a corporation, they do not. When in doubt, file the 1099. So we've kind of come to the place where if it's an LLC and they got a W-9, but they didn't fill it out correctly or didn't completely fill it out, we just issue them a 1099. The one exception to this is for lawyer fees, which just tells me that lawyers must have not been reporting their income. But all lawyers always will get a 1099 if they're over the $600 threshold, regardless of how they're organized. There's a separate box on the 1099 miscellaneous for settlement fees. That's not what this is referring to here. This is referring to the amount we paid them in legal fees, and that goes on the 1099 NEC. Some people get those confused or think that the legal fees go on the 1099 miscellaneous, and that's not true. Okay, so these are due to the recipients by 1/31/26 and to the IRS by February 2nd. I thought it was really interesting this year when I was rereading the instructions, because doesn't that sound like fun? That the deadline that when it has to be filed gets moved back if it falls on the weekend, but the deadline for the recipient to get their copy does not move. So they always will need theirs by the 31st of January. The IRS deadline is the 2nd of February. I do want to mention here that the places where I see 1099 NECs not being filed is when we're paying payments to support other pastors or missionaries directly. You're paying them for a service. I mean, that's the shortest way to answer that. Any support you have from pastors or missionaries that's going directly to the individual gets reported on 1099 NEC inbox. Yeah.
Can you
Okay.
describe that? That does not mean their monthly
Yes, it does.
salary.
The monthly mission support.
It would just be expenses and that sort of thing.
No, this is their monthly mission support if it goes
Okay.
directly to them individually.
Okay.
If it goes through a mission sending organization, so like you sent it to, I don't know,
OMS. Yeah.
yeah,
Oh, I
OMS or whoever, you would not
Okay.
give them
I
money.
see. Okay.
But if you pay it directly to them, like it's wire transfer to their bank account in whatever other country where they're at,
Mhm.
that would go on the 1099.
Got it. Thank you.
There is an exception for that, but it probably doesn't apply to y'all. But for whatever reason, AG World Missions, the Assemblies of God, their money goes directly to the individuals, but AG issues them a 1099. It makes no sense. Anyways,
Well, does it matter where their citizenship is or where they pay tax? I guess
you do not issue 1099s to non-citizens.
right. Okay. That's making sure. Okay.
Okay, so if they're a U.S. citizen, most of the time, I mean, not always, but most of the time, the missionary we're supporting came from here and went wherever. But you do not do 1099s to non-citizens. It's a totally different discussion when you have non-citizens coming here, and that gets a little muddy. Technically, they're not allowed to work here if they're here on a visitor's visa, so you could get them in trouble. FYI, if you want ICE to come to your door, no, I'm just kidding. It's not ICE, but whoever enforces, because it requires certain visas to be able to work here. So if they didn't come here on a worker's visa, then they technically are not allowed to be paid for services performed here, which is a whole other sticky can of worms, or can be. Okay, 1099 miscellaneous is Let's see. Oh, we're still good on time. Okay. So the threshold here is $600 in most situations. Box 1 and 2, which is rent and royalties, has a $10 limit. Otherwise, no one would ever, well, I guess sometimes you would have royalties more than $10, but it's not usually a huge amount for there. So the limit's $10. Same thing. They're issued to individuals, partnerships, and LLCs taxed as partnerships, not corporations. That's the basic rule. The due dates are the 1099 miscellaneous is due to the IRS by March. Back in the day, and I don't even think it's been that many years, but when the 1099 NEC and the 1099 miscellaneous became two forms, and it wasn't all on one form, they did that so that the NECs, which is most of them, were being filed earlier with the IRS so people could file their tax returns and it would all match correctly. But these 1099 miscellaneouses, which is not earned income usually, is not due to the IRS till March, the first day of March. Last day of February, it bumped to March 2nd for the 26th. This includes payments of rent through your benevolence program. And I'm not talking about payment of rent to the individual. I'm talking about if we paid a landlord rent for a benevolence program. So I know that's kind of hard because often you don't have the information on the landlord, you just have a name or something. So we need to make sure we're getting W-9s before we pay rent directly to a landlord for somebody that's benevolence, because paying that rent, the description for these forms say they're payments made in the course of business, and benevolence is part of your course of business as your church. So paying that rent to them is reportable on 1099 miscellaneous. So that's the one place I see where things are a little stickier, things are unclear. 1098C, we talked about this earlier. Those are due also the beginning of or end of February to the IRS with the 1096, used to be with the 1096. It still technically goes with the 1096. The issue is everything's done electronic. So you're not filling out a 1096. It's like created as a summary of what you filed electronically. But that's how those get filed. All right, any more 1099 questions before we move on? I think our next discussion is W-2s.
I have a question about,
Yes,
so
ma'am.
if your church had a raffle and the prize was more than $600, we would need to give a 1099 miscellaneous to the winner. Am I following?
Correct. There's
Correct.
a box for winnings. I don't know the number off the top of my head because I don't see it very often, but yes,
Okay. Okay, got it. Thank you.
you're welcome. All right. Preparing and filing forms W-2. Just as it is with 1099s, normally your W-2 out of your payroll system only includes amounts that were paid through your payroll system. So to that end, before you file your W-2s, you need to make sure that nothing else was being paid to those employees, not through the payroll system, that should have been taxable to them. And that needs to go on their W-2 in the fourth quarter 941. So oftentimes, and it depends how big your church is, but oftentimes AP and payroll don't really talk to each other. Like this person's paying the bills and this person's running payroll, depending how big your church is. It may be the same person doing all of it, which is great because then you have knowledge of what's going on the other side. But if that's not the way your system works, payroll needs to know what AP is paying for the employees. That doesn't mean everything that is paid for the employees is taxable, but it might be. And you don't know if you don't even know what's going on. So we need to make sure that we're reporting anything that's taxable to the employee on the W-2 that was not necessarily run through the payroll. So the most common thing there is a gift, usually. We need to make sure that any gifts to employees are included on the W-2. Now, this should have been caught when it happened, but that doesn't always happen. In my experience, when I file my quarterly 941s for my employers, I always require the bank account to be reconciled, and I always do a general ledger review because I'm looking for things like this. I'm looking for benevolence that's paid to the employee, which is taxable. You can pay it, it's fine, it's just taxable. It needs to be on the W-2. So we be really careful with this. In the church world, we see love offerings a lot of times, and because we have this thought that gifts are tax-free, they don't always think through the fact that that's not true for a minister. If you receive a gift for doing your job, it's now payment for services. And we just passed Pastor Appreciation Month last month. So I'm sure there were lots of fun checks that went out to our pastors. And probably, I don't want to put a percentage on it. A lot of them are probably not included in taxable compensation, probably not run through the payroll system yet, but it's okay. They can fix it by the end of the year. Just make sure it ends up on the W-2. But we do see that a lot.
So, Sandra, I have a very quick, very fresh example of this. So I did a wedding in Colorado for a former church member, um, and they sent me a very generous honorarium because I traveled there and came back and all that stuff. They paid for my lodging, all that stuff. Um, but she wrote in the memo of the check, gift. And she's a CPA. Like she wrote gift, and this is so you won't have to claim. No, 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 no. This is part of my job. Like so I will be claiming that, that money on my income. Like I don't want to get imprisoned. So
For sure.
yeah, I
You should
mean,
have to be really careful there. And like I said, in the church world, we see this a lot. Now, I've done some speaking with payroll groups who are not nonprofit or church payroll groups. They're just payroll groups. And so this is like no big deal to them. No one's giving gifts like in the corporate world to people just because they call it a bonus. It runs through payroll, like no big deal. But in the church world, we just don't think about it the same. So in order for something to be a true gift, it has to be detached and disinterested generosity. That almost means you don't even know the people. I mean, to some level, because oftentimes I've seen people show up again like they knew them from several years before, and God just told them that they should give a gift to this person, blah blah, a minister from previous like minister relationship. And even though that relationship does not exist anymore, it's still based on this ministry relationship from several years ago. So you have to be really careful. You can get away with it if you're getting a gift from a related party, like my sister gave me a gift for some reason, or my parents gave me a gift. Um, so yeah, it can be okay, but most of the time within the church world, it's not. It's payment for services. No matter what you call it, no matter what it looks like, no matter what you write on the check memo, it's still payment for services. And you just need to be treated that way. So we need to make sure it gets on the W-2s. We need to be really careful with our volunteers. So what does volunteer mean? Well, it means you did something without being paid. So as soon as you pay them for volunteering, they're not a volunteer anymore. So they're either a contractor or they're an employee. There's a little bit of a loophole only in 501c3 organizations. So this isn't everybody, but it works for a church. So what the instructions say is they say before you have to withhold FICA, which is Social Security and Medicare withholding, wages have to be $100. Okay, so great, you paid them less than $100. We're not withholding FICA. The second thing it says is if no tax is withheld, then you don't have to issue a W-2. So if we pay our volunteers less than $100, we don't withhold any tax, and then we don't have to issue a W-2. That only works in the C3 world, 501c3 world. So it's a very small loophole, but you have to be careful because oftentimes when people volunteer in multiple departments, they may be getting funds from multiple places and nobody's talking to each other. An example of this is my boss volunteered at church and she got something for teaching Sunday school, and she got something for being on the worship team, and very quickly we're over this $100 and now we have an issue. So you got to be careful there. But just the main thought is realize that there potentially are things going through AP that need to be added to payroll before the W-2s are processed, and not just assuming that everything that is in the payroll system is the only thing we need to put on a W-2. It's just not true. Okay, we need to review taxable fringe benefits and compensation items. There are all sorts of ways we can pay people tax-free. You just got to make sure you have the plan set up the IRS requires. You got to make sure the qualifications are there to meet the plan requirements in order for it to be tax-free. Here's some examples. Love offerings, always taxable. Personal expenses, always taxable. Personal tax reimbursement. This is referring to most likely, as people call it, the SECA allowance. So we gave them money to cover part of their taxes. That's a personal expense for them. That's taxable. Any flat allowance is taxable. You cannot pay moving expenses tax-free. People are often surprised by that. That changed in 2018. That is 7 years ago. So a while. You can't pay moving expenses tax-free unless you're military. And then military can do all sorts of things that we can't do. But so taxable. That includes lodging on the trip, that includes meals on the trip, that includes put them in a hotel for a couple of days before their house is ready, personal expense, taxable. Any unsubstantiated advance or reimbursement is taxable. So unsubstantiated means we didn't get receipts. Oh, we just spent that on, yeah, we need a receipt. Here's some things that could be taxable. The provision of a church vehicle. So for that purpose, those purposes, you have to make sure that you're keeping track of the personal use, personal miles versus business miles. There's a big calculation the IRS lets us do to figure out how much of the annual lease value of the vehicle is taxable, gets added to your W-2. Dependent care benefits, tuition assistance, life or disability, insurance. For life and disability insurance premiums, it's a little complicated if you've not really thought through that before. So basically what the IRS says is how the payment of the premiums are taxed. The opposite is true of the benefit. Okay. So if they're getting the benefits, if they're getting the premiums tax-free, like life insurance premiums, disability insurance tax-free, so we're paying it for them, then when they get the disability or they get the life insurance, that's taxable. Well, usually, maybe this is just my experience, I would rather pay tax on the front end when I'm like working a full-time job and you're paying my benefits and making it taxable to me, so that whenever I need the disability or my family needs my life insurance, it's tax-free at that end. So
What's the $50,000 in that? I know there's
the
a
$50,000 threshold is for group term life
Okay,
insurance
thank you.
only,
Gotcha.
which that's fine. You can pay up to $50,000 benefit per employee tax-free. If you go over that benefit, there's this lovely calculation and schedule to figure out how much is taxable. It's a little complicated, but it can be done. Accountable reimbursements are taxable. No. Accountable reimbursements that are substantiated. So we got receipts. We know what it's for. We've like written down, had lunch with this person. We discussed this event, whatever. Receipts with substantiation are not taxable. If they're unsubstantiated, so same thing, like they charged on the church credit card and never gave you a receipt. It's the same kind of thing. Those would be taxable. Okay, so other taxable things to be added to your W-2. You need to realize if you use a payroll provider like ADP or similar, at 1/1/26 at 12:01, they've run your W-2s. It's not quite that fast, but it's pretty fast. And so if you have not told them about other things that are taxable, then the W-2s that have been processed are wrong, and now you have to amend W-2s and 941s to make it correct. So we've been able to talk to, I think it was ADP, and got them to like hold 10 days. Like, will you not process the W-2 for 10 days so I can look for stuff? But their default is just run it as soon as the new year starts. And great for them, they're done easily. But we do a lot more looking than that, so it takes me a little longer to do all my employer's W-2s than ADP. But you just need to be aware of that. All right. Updating payroll forms and elections. And I'm going to kind of go pretty fast this. Maybe not. Maybe we'll be okay. All right. Updating W-4s. This is not required, by the way. But if people would like to redo their W-4, they are free to do so. They just have to use the current form. So if you had a 2018 W-4, and I think that's the last year before it changed to look like this, then if you redid your W-4 now, you have to use the current form. Does that make sense? So employees are not required to update them annually, but if they do, they have to use the new form. If somebody claims exempt on their W-4, and this more applies to non-ministers than to ministers, ministers aren't required to fill out a W-4 at all. They just have to tell us what to withhold. So this doesn't really apply to them. But if somebody else said exempt, then you have to get a new W-4 every year, or their withholding switches to the highest, which is single with nothing else marked. Minister employees don't have to do a W-4, but they need to tell you what they want to withhold. So it's the end of the year. It's time for them to do a tax estimate, figure out how much was withheld last year, figure out how much they want withheld this year. Until they tell you something different, whatever you have from them, an email or whatever, stands. So it doesn't expire at year end, but it's a good time to look at it. Just because, the end of the year reminds us to look at things. we need a point in time to look at it. And this is kind of a reminder of that. Like I said, they don't have anything withheld, but if they want withheld, they need to tell HR so we can withhold. for their checks because, it's not fun to be doing your tax return and then realize you had nothing withheld the entire year. Unless you planned for that. I mean, maybe you did plan for that, but that's not what I see most of the time. Most of the time, people are not super happy that nothing was withheld the whole year. Although they enjoyed it when they got it on their check. So you would think they would have noticed it. I mean, I don't know. Maybe that's just me. I would expect you to look at your paycheck stubs and realize not a year later that, oh, you weren't withholding tax. You have that login to your portal so you can check it out. Anyways, but they don't always do that. People are busy. That's okay if they just know they may owe tax. They don't have anything to tell. Okay, updating housing allowance. Once again, this does not have to be done every year, but it's a good time to do it. And it really depends on what your form says. Some churches have a form that on it says that it expires at the end of that year and it's only for that year. And if that is the case, you need to get it redone. They need to resubmit their housing, what they request for housing. So what has to happen is that housing designation has to be approved in writing in advance of being paid by the board. So like in the board minutes. Like I said, you don't have to redo it every year, but generally about this time of year, you send whatever form it is that you have. There's not really a standard. I've seen all sorts of different forms where the minister estimates their housing expenses for the next year and requests however much they want withheld or designated as housing. But it's time to do that. I do need to mention to you that if you had a mid-year housing allowance change, so in the middle of the year, you had a minister who bought a house and decided his expenses were going to be higher because his mortgage went up or he had a big down payment or whatever it was, and you change their housing for the second half of the year, you need to realize that if you increase it for a portion of the year to cover the whole year increase, then that's probably not the amount that needs to continue. It could be overstated, and we don't want to overstate it because then they just end up with excess and then they owe more tax. And so good time to relook at that. At the housing allowance designation and kind of just see what needs to be done for the year. I will tell you, if you update your form so that it says until further notice, you don't always have to do this every year, but that's kind of up to you and what you want to do. I've seen it both
I
ways.
changed our comp form to say effective date and not end date.
Yeah, just
so
so we
that was it.
know. I mean, like I said, as long as it doesn't expire, it could stay the same forever, which is a little bit easier on the people trying to hound everybody and get everybody, because people may want to change their amount, but not everybody may want to change their amount. Maybe totally happy with what they have. Their housing situation did not change. Okay, we need to update annual payroll elections. Some of these have to be redone every year. HSAs have to be redone every year. The FSA has to be redone every year. Dependent care has to be redone every year. I provided here for you the new 2026 limits. So for the health flexible spending account, the maximum is $3,400 for 2026, plus a carryover from 2025. So that makes it $4,080 for the year total. Dependent care flexible spending, the max is $7,500. Half of that, actually, it's not quite half of that. Yeah, it is. If you're married filing separately, health savings accounts, the new limits for family is $8,750. I will mention here that you can't have a health savings account without being enrolled in a high deductible health plan. Those go together. If you don't have one, you can't have the other. Also, if you are eligible to take Medicare, you can no longer contribute to an HSA. Sometimes that gets missed somehow. I had a client who his employer gave all the employees a certain amount in the HSA and did not take into effect the fact that he was not eligible. So we had to return it and it was just a mess. So just be aware of that kind of as you're going. That these ones listed here have to be redone annually. So if you have any of these plans, you need to be giving them forms again to get new amounts for the new year. Here's some other ones. These do not have to be done annually, but they can be. And some people just like to redo everything every year, makes them feel better. But not required. The end of last week, we got our 403B deferral limits. They've been discussing and not deciding on those for a little while. But here's our new amounts. For 2026, the employee deferral can be $24,500. And then if you're older than 50, you can do an additional $8,000. But if you're in the magic window of 60 to 63, you can do an additional $11,250. I guess they're gonna let them do more right before they retire, maybe. I mean, it's kind of a weird window, but so those are your limits for 403B deferrals. That is not the total contribution limit. That's just the deferral limit. The total contribution limits are different. I don't have those right here in front of me, but you can look them up pretty easily. If your health insurance runs on a calendar year, it's time to redo all the health insurance deductions. Oftentimes the enrollment period is earlier than right now, to go into effect 1/1. But if you have new deduction amounts, you're gonna have to update your system between your last payroll of last year and the new payroll of the new year, which is why all of us payroll people work between Christmas and New Year's every year. I don't get that week off. That is payroll week, to get things ready for the next year. Any other payroll deductions, like I said, if it does expire, you need to get a new form. If it doesn't, it can just stay status quo. That's kind of up to you, up to whatever y'all decide to do. But at least think about it. You may want to put a bug in someone's ear and say, hey, it's time to update. If you want to change any of this, let me know. Kind of leave it there and let it be on the employee to say something if they want to change something that's not required to be changed. All right, one big beautiful act updates. There's only a few of them, but I think it's 3 or 4 slides of updates. The first one, which makes me so happy, and anyways, the nerd that I am, the new 1099 thresholds are increasing for 2026 forms, up to $2,000 from $600. We're very happy about that. We've chased down a lot of barely over $600 people to get W-9s and stuff they didn't do on the front end. But starting with 2026 forms filed in 2027, the threshold was up to 2,000. What I'm not super happy about is then they are indexing it annually for inflation. So we're going to have all sorts of weird numbers potentially for 1099 thresholds, which is kind of annoying. It's been 600 for a very long time. I don't remember it ever being something else. I asked Elaine when that happened and she couldn't remember when it was something else. So it's been 600 for a long time. Maybe since, I don't know. But it's going to at least be more. That'll get rid of a bunch of your little people who are paying, barely anything. I do also feel like this is going to encourage people to make people contractors more than employees. That's not really a smart decision, but now they're like, oh, I'm never going to pay them $2,000 this year. I'll just be under the radar, and I don't like that discussion, but potentially that will happen. We also have some new worker deductions. Now, these deductions go into effect for 2025. And they do affect the W-2, but they're not providing new W-2s for 2025, which is a little unfortunate, because there's some new deductions that the workers can get based on wages, but the form itself is not going to provide this information to them. So we're going to have to provide it to them in some form or fashion, but we really don't have any guidance other than it says there won't be penalties if you don't do this. Well, great. Anyways, but if somebody receives tips of up to $25,000, they can get an above the line deduction. This is the whole no tax on tips thing. I'm sure you've heard it around. That doesn't really affect us much in the church world usually. So I don't see that that's going to be an issue. The one that might affect us a little bit more is that there's going to be a deduction of up to $12,500 for overtime premiums. It's just the premium. So it's not, normally overtime is times and a half. That's what the IRS or the FLSA determined. So it's not the full times and a half. It's just the half. So it's the premium. It's like the additional amount you made because you were working overtime. And this is the law very specifically says that this is calculated based on the way the Department of Labor calculates overtime. That doesn't matter to us in Texas, but different states calculate overtime differently. So in California, if you work more than 8 hours in a day, it's overtime. So they're going to have to do a lot of recalculations to figure out what would have been FLSA overtime. We won't really have to do that in Texas. But needless to say, like I said, the W-2 is not changing. So we're going to have, if we paid overtime, which you may or may not, it just depends on who your workforce is. You may want to figure out how you can determine what overtime premium was paid to those employees and give it to them in a letter or something like that. So they can get the benefit of this deduction for 2025. The problem is this came out in the middle of 2025. So if your system wasn't keeping up with that information well, you may have to go back and figure out some way to manually figure out overtime premiums. I process payroll for about 30 employers on an ongoing basis, mostly churches and nonprofits. So our system keeps track of it mostly. I have to go figure out who I have to provide letters to, so that they can get this deduction. Because I definitely need to get the value of the deduction, even though the system has not been calculating that necessarily in a way that matters or can be provided that easily. Especially if there was a raise in the middle of the year, it's going to be interesting. But realize this is, at least for the next several years, this is a thing. In 2026, we will get new W-2s, which are going to have a new box 12 code that's going to have the overtime premium and the tips are going to be disclosed there so people can easily see them to get their deductions for these two things, but nothing for 2025, which good and bad. Like the systems couldn't catch up. That's really what I think. I think none of the payroll systems would have been able to fix your box 12. So I don't know how they would have mid-year figured out how to get those numbers. But in 2026, the W-2s will change. There'll be new box 12 codes. So you'll have a box 12 code TT for your overtime premium. The other thing they did with the tips, which like I said, doesn't really matter to you, but they after the One Big Beautiful Bill Act was announced, they went on to say that only certain industries could get this tip credit. And the industries end up being industries where tips are pretty common, which is kind of interesting. I mean, we're kind of in this tip society now where everyone wants to be tipped for everything. And I'm like, you didn't even do anything. Like I came up and picked up my food. Why would I pay you a tip? Like you cooked it in the back like you always do. Anyways, but so they tried, I think that may have triggered them to make this, you have to be in these specific industries. Like I said, if tipping is a normal thing in that industry, then it's included in these options. But may or may not make a big deal for us. There is a new 2026 W-4 coming out. I'm not sure if it's finalized yet. I didn't see that announcement come through, but they're working on it. Basically, they've changed it a little bit to adjust to those new deductions. The other thing that's a little bit helpful for you is that under step 4, there's actually a box to mark if you're exempt. And I see ministers filling this out sometimes, the W-4, even though they're not required to. So whereas before they would like hand write exempt down there, box 4, like right above the signature line, it says exempt from withholding, and there's a box to mark there. So that may help you if people are wanting to be exempt. They did also, there's a whole other worksheet, which I did not include here, but there's a whole other worksheet where they determined what they thought would be their tip or overtime deduction to figure that back into line or step 4. So it doesn't really matter that much to us, I don't think. But it is a few changes. They changed kind of the way it's formatted a little bit, but nothing major. But that will probably be released soon. So like I said earlier, if in 2026 someone is giving you a new W-4, they have to use the new form. That's pretty standard. Nothing new on that end. Those are the main things of the One Big Beautiful Act that affect us, at least as it relates to our discussion today. So here's some resources. That first one is Elaine Somerville's Church Compensation book. Yes, she's my boss, but it's a pretty extensive book with most things in it. Oh, look, Jim has his to show y'all. Is that the second edition? Yeah, it looks like it. So that's there. Also, ECFA is there, a link there for ECFA and the Church Law and Tax. They have like a membership. And there's a lot of resources you can get to and look at from there. The other thing I wanted to mention coming up, not totally, is in February, the end of February, the church ministries conference is coming up. It's in Houston at Sagemont.
I can't remember.
No, Champion Forest. It's at Champion Forest. I'm like, it's always there. I just can't remember. Champion Forest. It's on February the 24th. And that conference actually is a pretty good conference. It's not just HR and financial. There's like 10 tracks. So like there's a maintenance track and there's a youth ministries track and there's a, so.
Do you get, so I'm going to sign up for that, but do you get access to all the stuff that you don't attend?
I honestly don't remember. I think so.
Okay.
I think I went and pulled things
think
down.
so.
Both me and
Yeah.
Elaine are speaking there. She has 4 sessions.
Yeah.
I think, and I'm doing minister's tax twice, and then I'm doing a fringe benefit one with Elaine. It's on February 24th.
I'll probably
Really
be there.
pretty good bang for your buck, I think. I mean, I always like that conference. I'm sorry, did you say something, Jim?
Would these resources have suggested policy documents, or do we need to go someplace else? for that?
I don't, there may be some suggested policies in the book. Jim would know that more than I do because he has it right in front of him.
Yeah, I'm not sure.
I'm not sure. I think church law and tax might have some policies. I don't think ECFA does.
Okay.
Um,
I'm looking at, specifically for a credit card policy,
Credit
but
Oh
card
yeah,
policy.
I can send you email me and I'll send you the one from Midtex so
oh,
we have an HR firm that we contract with that kind of helps us
I
keep.
was like,
yay,
Frank
okay.
Somerville used to have them, but he's retired now, so I see him from time to time because he's married to Elaine.
Yeah.
But I'm not sure he has any.
Jim, are you on the Midtex website?
Yes.
Okay.
Jim Noble at midtexasgmc.org.
Okay.
All right, we have a few more minutes. If anybody has any questions, let's see.
Yeah, the slides will be part of the recording, which will go out as soon as I can download it and put it on YouTube. So
Okay.
not,
Super.
I guess,
Okay.
Elaine, you can send me the slides, right?
I can.
Sandra.
It's okay. You can call me Elaine if you want to.
I'm sorry.
That's a
You
very
said
high
Elaine a
honor.
second
People
ago.
think I'm Elaine.
Yeah.
I'm good.
Yeah, Sandra sent me the slides last time, so I think I'll put those out there too.
Yeah.
Okay, good.
Yeah.
All right. Let's send you this.
Thank you so much.
Thank you.
I've been through
You're very
these several
welcome.
times.
Let me know if you have any questions or I can help with. Oh, I didn't go to the last one.
I
There's
learn
my information.
every time. Yeah.
So please email me, call me. I will tell you that my phone, we all have different phone lines, but mine used to be one of the main phone lines. So I get a lot of solicitors at my phone number. All that to say, if you call, please leave a message. I'm not ignoring you, but I don't answer it if I don't know who it is because I don't want to talk to all the solicitors. So leave a message and I will call you back. And then I will help you where I can to kind of wade through some of this stuff or anything else that's, nonprofit tax related. That's kind of our wheelhouse and we try to help where we can.
Yeah, excellent.
Okay. Thanks
Thank
so
you
much,
so much.
guys.
Y'all have a
Thank
great
you so
day.
much. God bless.